Hey everybody, welcome to this episode of The Complete Advisor. We've got a repeat guest, which hasn't happened too often yet, but you are always welcome in that chair.
Thank you, Dennis.
Erik Bowman. Erik,
Love
good to have you here. Nice to see you. We're going to dive in. So we've had you on before, and we've talked about different topics. We've talked about courageous conversations, and this is a little bit of a spin off of that. And so for everybody watching this, Erik has got a little bit of a pensive look because I'm going to spring this on you.
Okay.
So we are going to dive into an area of experience, but it spins off of courageous conversations. And I recall back being sitting across the desk from clients that, from time to time, actually a fair amount of time, there would be uncomfortableness because there would be some financial disagreements. Because, they do say, so like money, when it comes to relationships, money is one of the biggest wreckers of relationships. And so what I wanted to talk to you about, there was a great article, there was a great article that came out that was about couples' biggest financial fights. And how to resolve them and some advice from different advisors. But what I was curious about, what I wanted to talk to you, without going too far into the article, but what are some of the bigger things that you've seen and how do you handle them? For example, if you're sitting there and a spouse says, if a client and somebody says, my spouse spends too much.
Spends too much money. It happens. I mean, there's kind of categories. Sometimes you have two people and they're both great at budgeting. Like they're going to be good clients if they decide to become clients because they know how to. They understand the logic of spending less when the market's down. You can spend a little more when the market's up, and you don't have to worry about them literally overspending and ruining a retirement plan. But then you get some spendthrifts, people who they may have had high income, didn't save well enough, but in their mind, with no math to support it, they may believe that they should be able to continue spending exactly what they did when they had dual major income, but they didn't actually save enough in assets, so they don't have enough to maintain the same standard of living pre-retirement. That's tough when they literally have like that sense of, I should be able to. Doesn't matter that I didn't save. I just should be able to. And so going over that math and showing them it, you're the bearer of bad news. Shoot the messenger sometimes. So you, of course, have to do it really diplomatically, but that's when both of them are in agreement, let's say, that they aren't good at budgeting and they just think they should be able to spend what they want to spend. That's one category.
Yeah, so you've got to see a lot of folks that come in, and I would almost think that there would be one person in the couple that would secretly be wanting you to say things that maybe that they should have been saying for years.
Yeah. Sometimes that is the case. They'll even tell me that sometimes. If only one came in for the first meeting or whatever the case may be, they might end up having me almost like the coach to try to coach their spouse and not spending as much. Or, hey, you got to show them so they really see what's going to happen. So that can happen. It does depend on the order of events and how they're going through the process of whether you can really truly do that. But some of them, it can be troublesome when you have somebody that just does not watch what they spend. And for them and for many, this transition from accumulation to distribution, they're so used to working and saving and being primarily able to spend whatever they want because they have cash flow, so they live up to that means. Yeah. Then when it comes to distribution, beyond Social Security, many times nothing else but your bucket of money, your IRAs, your Roths, your non-retirement accounts, and your cash. And the distribution process is extremely anxiety-ridden, watching the money come out and then a bad market on top of it, right? So that adds a layer of stress right there. And then trying to help them determine what is an appropriate run rate for this year or for, on average every year in retirement. And can they make their standard of living work well within that range? Yeah. And you get some people that are simply disappointed. But it is what it is. The math is the math. You certainly don't want to overstate what they can take out and then have a bad plan. So if one thing, I will raise the red flags. I will address them. You just have to be diplomatic. And sometimes it's like you two need to sit down. I actually use this analogy a lot. I say you two need to sit down over a glass of wine, talk about the budget. I'll send you the spreadsheet. You have to work this one out. I mean, I'm not going to get in line by line with them on utilities and discretionary expenses and what they can and can't prioritize to buy. That is personal for them, but I can certainly tell them what's that range of monthly spend.
What it should be.
And usually it is one person that is pushing the envelope on the spending, not both.
So do you feel sometimes like you're pushed into the role of besides talking X's and O's, securities, taxes, Social Security, rollovers, to all of a sudden you're doing a little bit of therapy?
I am. I mean, there's no question when you have to counsel somebody to spend less than they might otherwise spend. I believe you have to be direct. First of all, you have to be relatively confident that your numbers are accurate, that you haven't made errors. I mean, I double check my work. I'm looking inside the variables to see if I've made a mistake. But when you see a plan not work out too well on your software, whether it's eMoney, which is what I use, or otherwise, you know you're going in now and changing the variable in the retirement plan and lowering their expenses, not talking to them just to make the plan work, and then you have to go match that number with their reality, then they might have to make adjustments. The good news, it's not like half the clients coming in are like that.
Yeah.
I'd say it's probably about 15% of the clients need some really direct coaching on the spend rate, the burn rate, we call that. And then there's some that are, a little bit irretrievable, I guess, and they're going to learn the hard way as you do meetings to show if indeed there's a rapid reduction in their liquid assets that you can see is coming. The train's coming. You got to start getting prudent expense control at some point.
Do you see a lot? I would imagine that there has to be that contingent of people that aren't on the same page, and that's maybe one of the reasons why they're wanting to come in and talk to you.
Yeah.
Now, with that, so
usually the one who's not on the same page doesn't want to come to the meetings.
Does it affect a little bit? Does it take a little longer then to? So I would imagine that if one person might feel not ambushed, but like a little ganged up on,
sure.
The spender of the two.
Well, let's actually dig into that. Let's not have a presumed outcome that a couple where there is a disconnect between what one thinks and what the other does on spending.
Sure.
Let's not just presume they become clients.
Yeah,
Sometimes
exactly.
those people have so much to work out that they literally are not qualified in some respects to actually become a client. They may have assets, but not enough assets. They may have some income, but not enough income. But they aren't able to get on the same sheet of music. Good retirement plan is a team effort. And the team effort involves primarily three people, myself and the couple, in the case of a married couple. Then I apply a sniff test to this. Is the retirement plan good? Is our distribution strategy good? And the litmus test is who sleeps well at night. There should be three parties that sleep well at night. Each one based on their own perspective of the plan and how it's executing. Me, with my knowledge base and perspective, if I'm sleeping well, I know how the strategies work. I know how our portfolios would react to the market. I know what protections we have in place, life insurance, long-term care, or not. As long as I'm sleeping well and we have done what I truly think is the best empirical job we have done to create a good outcome, that's a good thing.
Yeah.
But then based on what they know, they each need to sleep well at night. Right? Well, if you can't ever reach a plan where all three of us can sleep well at night for whatever the reason, then that plan is not going to most likely execute. And you can't just lower the bar and say, well, let's just assume we get 6.5%.
Yeah, you're just setting yourself up for failure.
You're just setting yourself up for failure. My assumptions on inflation and rate of return tend to be conservative. They are conservative, and I always use them, and I won't change them to make a plan look better for a client. Even if they say, we should get more than that, I'm like, I don't believe you should plan on that.
Yeah. It's besides setting up expectations incorrectly, I would worry about, from the responsibility and maybe liability of it if you over push. Okay, so I've got one. I'm looking through, and one of them here, I was thinking about this. They titled this section of the article. I'm going to switch over to it. They titled it "Yours, Mine, and versus Yours and Mine versus Ours."
Yeah.
And I know that with in relationships and divorce and then remarriages.
Yeah.
There's that coming back around the second time.
Yeah.
Are you seeing that, and how do you handle that?
Yeah, there tends to be more of a division of assets if they came from previous marriage where, I pay these expenses, he pays those expenses. To me, it just, even though I know it's real and I think it can even maybe make sense in those personal situations, but it's so diametrically opposed to my life, like Heidi and I. Our money is just combined. We use our money for our bills, for our discretionary spending. Everything has been commingled forever, and it's just the way it is. So it's almost hard for me to have to change my perspective to one where it sounds sensible to literally have your own checking account and your own savings account. However, there are people with that, and you have to kind of put yourself in their shoes. It is where they're coming from. I don't think trying to change their mind is worthwhile. So working within that context, I have a couple couples like that, where I manage both of their assets. They're householded on the portal, so it's like a husband and wife. But literally, I talk to hers about hers. I talk to his about his on phone calls or reallocations. And of course, that's privacy. You have to do that. But rarely is it joint meetings.
Really?
Yeah.
But they're married.
And they're married. And that's on the phone for maybe a transactional conversation.
Yeah.
When we do periodic reviews, we do get together. But inevitably, even in those reviews, we're like, well, what happened if it was just me? You see it sometimes. And so I would flick the switch. Okay, what if it was just you filing single and husband's dead or whatever the case may be? So you see a lot of different combinations. I think that, boy, you've got to come at the stuff and just not be judgy. You just got to come at it and understand that's where they're at. It makes sense to them. Can we work within that framework? Does it make sense from a planning perspective? Can we get on the same page when it comes to the commonality? Because separate as you want to be, if you're married filing jointly, your distribute impacts their taxes.
Yeah.
Your distribution impacts their taxes. So as much as some one separation, they have to realize that their decisions impact, in essence, each other because the government looks at them, if you're married filing jointly, as one household unit and everything is combined together. Most people, we can actually work within that structure. Most. Every now and then, it's just this really clear separation, and just because sometimes I've managed just one spouse's assets and not the others.
Really? So that they would be the other spouse has their assets somewhere else?
Yeah. So the planning, I'm talking exception. I'm actually looking at one right now. It may actually be the first one that comes through like that. I think I have one other, but certainly not my optimal client necessarily. But if it's a really good person and that person just like, I need somebody to help manage my money and I've got 1.1 million, I'm like, well, let's talk.
Sure.
I just can't necessarily do some of that joint planning piece, but that's not the mandate they want from me in that interesting case. But it is definitely not leveraging, the full value we can bring to bear as a financial firm when we don't really have that team effort.
Yeah. What about, so one of the other ones that it mentions in here that I think is interesting is, because I'm a little bit, I like to pride myself on being pretty laid back. Mm-hmm. I actually am pretty stubborn. Mm-hmm. And I do have this problem. This section is titled "My Way is the Only Way." And I do, we do have those things. But do you see that where in a relationship where one of the spouses has a maybe a bullheadedness, if you will, or a stubbornness, and it's their way, and versus
the planning that I have, or versus something their spouse is saying?
Let's do both, because that really does hit. I mean, it is the financial therapy we're talking about here.
Yeah, there's some level of teamwork and agreement on the structure of our plan and our investment strategy, but there are limitations to how much I'll deviate for a bunch of reasons. First of all, if there's literally just a mismatch on how I perceive risk and investments and long-term rate of return potential versus what they literally think, then there's going to be – it's just not a good match. It's not a good fit then. By the same token, I can allow for some leeway. Like I don't want to use structured notes. Fine, no problem. We don't have to do a structured note. Just understand, here's what you won't be getting and what you'll have in place of those. Here's why I would recommend them, but in this case, we're not going to do it. That level of deviation I can work with. But if they say something like, I need you to guess and figure out when to go to cash before the market goes down, I'm like, I can't meet that obligation. I'm sorry. I can't predict the future. And there's some other examples, but it usually doesn't work out as well. In every case over the last 5 years, the 3 times where a client mandated something contrary to my advice, they by far had the worst outcome over that return year than any other client in the mix.
Now, it's got to be when something like that happens, does that kind of end the relationship?
Not necessarily. I mean, the one I'm thinking of in particular, we're actually working on. He said wanted to go to cash, and it just so happened the day he wanted to go to cash was basically the low point in the year 2022, which defies every principle of investing. Sell at the lowest point. So he did the typical, like what people would say a retail investor could do, which is why the rate of return doesn't even beat inflation typically.
Yeah.
But in that case, I just kind of laid out my theory and my rationale, and he said, nope, we're going to do it. And then in essence, he came back apologizing, saying the worst decision I ever made. And I'm not making this up, but we're still not back in the market fully. So the only way to get back in without guessing, just like the only way to get out without guessing, is dollar costing in. So we had to move them. We're moving the money in very slowly, he's still a good client. We're just working with him in the context of this hyper conservative nature, and He's just not used to either having advice too. So how do you learn to take advice and then make decisions with it? That's a challenge for some people.
We when I was in private practice, we had a client that he would want from time to time to buy penny stocks, and he exactly
What kind of stocks?
Exact penny stocks,
Okay.
penny. And so he had this one that he asked, our 2 cents on it, and we gave it because it was like no rational person.
Right.
And lo and behold,
He became a millionaire.
well, he didn't become a millionaire, but that thing just
after you said don't
took
buy
off.
it.
I mean, it defied logic and everything, and just. And so we would. I'm sure he's still with the firm. But man, that would come up just about every time. It's like you'd make a recommendation, and it'd be like, "Oh, is this going to be like blankety blank?" And it's like, "Oh man."
But you know how we like that one in particular. I have had some clients, like for example, they want to buy Tesla. They just they own one, they want to own some, and we don't like concentration risk. We try to stay diversified with low cost ETFs. So generally speaking, we say we don't pick stocks. Like that's an impossible thing to do consistently, right?
Yes.
So we don't pick stocks. But if somebody's just adamant about it, we'll do it. We document it too, and we'll just say we're purchasing that because of this. You don't want to just really fight somebody on it to the teeth when they're fairly committed to it, but try to alleviate how much. Like surely you can't put your entire retirement account inside of one asset that's that risky, right?
Yeah.
So trying to maybe you need an account, an IRA, for example, a retail IRA with $10,000 in there, so you can have play money to do what you want. We have some clients like that, and that's the way we separate their emotional and kind of fun money, if you will, for investing versus what we're doing for the retirement planning money, where we're literally trying to determine a goals-based rate of return and then figure out the lowest risk possible way of getting there consistently over time. Mm-hmm. So instead of saying don't buy that stock, it goes back to general principles. We're trying to find a goals-based rate of return with the lowest risk over time. Buying one stock doesn't really fit inside of that general principle. I'm not saying buying that stock is the wrong thing to do, but perhaps if we want to do that,
do it over here.
Do it over here.
Okay, so since the topic was really kind of being a financial therapist, have you had the experience of when the factors inside the relationship end the relationship, and so we go to divorce?
You mean financial advisor and client, or client, husband and wife?
The client. So you've got clients.
Yeah.
Things don't work out for them. They get a divorce.
Oh, okay. They get a divorce.
Have you had the experience? Have you been able to? So one of the things that I've seen happen is where somebody hanging on to both of them as clients is super hard because somebody will be like, well, he's your guy.
Could be. Yeah.
Have you had experience with that yet?
Yeah, and I think it makes sense to break the relationship with one, most likely. It removes potential conflict of interest. Not that you divulge private information, but you would have to be right on the money to steal from your
Just
mug
like
right there. You'd have to follow that to the T. Plus, there's a lot of relational noise that's occurring there, and potentially to make my life easier, it would be better not to be in the middle of it. Mm-hmm. I don't want to be in the middle of that, and there's going to be drama. There's going to be arguing. You're going to be pulled into the vortex. So I think that you almost have to just pick one. But I think it's okay to remain with one and probably have a better relationship with the one than the other anyway. And that's typically what I've seen. That is what I've seen happen in my firm.
What about we're going to head to the close because I know you've got a jet to the airport. No pun intended.
Yes.
Actually, all full pun intended.
Full pun intended.
What other when you think of your book of business, when you think of your experience, one, have you ever sat down on that initial meeting when you're meeting with somebody and you're watching the interaction between the two people, mm-hmm. and you're just like, no, this is like a bag of crazy cats here. We're not doing this.
Oh yeah, I've seen it plenty of times. I mean. And depending on the situation, if you believe you're making a judgment call that based on what I'm seeing now, if there was any continuation of this behavior, they're not going to be a good client. So maybe we're being a little too judgmental.
Sure.
But sometimes it's good to make a quick decision because you don't want to waste time and spend hours with a client that's not going to become a client unless you're just into a painful learning experience, right? So sometimes you might make a judgment call, in which case that's the great thing about having a good process in place is you can deviate from that and say, what is the diplomatic way to end the engagement process where they almost kind of don't know that it was this conscious decision, it just makes sense not to, and that would be the path I would take in that instance. And I have done that multiple times for sure.
What any other as we come to the close here?
And that's before they become a client, when you're going through the engagement process.
Or have you ever had to? Since you just said that, have you ever had to kind of break up with a client?
No, not really. No, I mean, I've had a couple where I did break up with them, but they changed their behavior in a positive way and made amends. Maybe they were rude to my staff or something like that.
Did you address that? Like, so they knew why the breakup was coming?
Yeah, because I specifically told them that. I said, doesn't seem like this is the best fit. You should probably look to find another advisor as soon as possible. I'll manage the accounts in that time, and I'll help facilitate any transfers, because it just doesn't seem like there's a match in my principle of investing and our methodology compared to you want. Not bad. It's just it's different. But then in that instance too, there was a situation where that person was kind of rude to the staff, in addition, that I didn't know about until after the fact. Yeah. So I had asked and I had mentioned that to him, and what ended up happening was a bit of a mea culpa during the next 20 minutes, saying, I still need your services. And then the next day, without telling me, but I heard from my staff, he had called everybody on the staff and apologized to them.
Oh, wow.
Which was it was a great thing. He is a client now, so that one got retrieved. I haven't actually had an actual client where we said, we're not a good fit and we didn't recover. Hasn't happened yet.
Oh, good. Knock on. But that's, that's a good testament to the induction process and making the screening early, which, that's
it is a fit process, right?
Exactly.
For sure.
Exactly. Because if you wouldn't want to be hanging out in a room with them, that's something to consider. They've got the assets, but do I want to be in this room with them? Because this is a commitment. It's like, we're
That's an empowering decision to make. When you have a client, and I'm thinking of somebody who was a prospective client, never became a client, had, I think, $5 million in cash, and had to end the meeting before the meeting was even over. Had to say the meeting has come to a conclusion. It would appear we're not a good fit for what we offer and what you need. And basically end that meeting. And it's a little staggering to those type of people, because they're usually high confidence level if they're able to create that kind of stuff during the initial meeting, and they're not used to it. But how empowering is that to say, I have a firm, I can literally turn down a $3 million client and feel good about it because it was right for the client, right for me, right for the firm, right for my other clients, because we do events, and not feel like, oh my God, what did I miss out on? Yeah. It's the principle is way more important.
It's an important thing. With that being said, sir, I've got to get you to the airport because we could keep talking, and I'm getting buzzed in my ear that I need to get you out of here. So chair is always open for you to come and talk. I've got more topics to talk about, pick your brain about, but Erik, thank you for being here. Always a pleasure.
Always a pleasure. Thank you.
And for everybody listening, I always forget to do this. Don't forget, like, subscribe, shoot me a comment. I would love to know what you're thinking. But if you do subscribe, that is how you do know immediately your notification that we dropped another episode out there into the podcast world. So, okay, that being said, Erik, let's get you to the airport.
Thanks a lot, Dennis.